This is a special segment, Value Plus. Mangalam, you've been looking at the Timex Group, some important developments overnight, a large OFS, a large supply line offering. What do you make of it?
Well, it's a very interesting deal that has happened. You know, one which has happened earlier as well, where the foreign promoter looks at the Indian company and tries to offload some stake out there. But, you know, this is beyond that. We're just trying to look at what the business does and, more importantly, how it's valued as well and who the buyers in that could be and what they get out of buying this as well. So for starters, the news is Timex Group Luxury Watches BV, which is the promoter, holds about 75% stake in the company, wishes to sell 15% via an offer for sale, and the floor price is 175 rupees. Now, you would see the stock lower by 5% today. Remember, the previous closing price was 264 rupees, so the floor price is actually nearly a 35% discount to the previous floor price or previous close price itself. What does the company do? The Timex Group on the whole is America's oldest watchmaker. They design, manufacture and distribute watches and jewelry for brands. Not only do they have their own brand, but they also have manufacturing operations for brands like Versace, Guess, Furla, UCB, Ferragamo. So a lot of these designer brands outsource their watch manufacturing to Timex. They have multiple sales touchpoints in India. If you look at their India business itself, from FY22, ignoring FY21 because there was the COVID impact, there has been a steady rise in the sales. And EBITDA in FY22 was obviously impacted by COVID, but thereafter it has been in high single digits for most part of the last 3 years. The only problem with the business, along with everything else, is the inventory days. Because if you look at it, FY22, the inventory days were 130, and that has inched all the way up to 180. That's nearly 6 months of inventory lying on your books, and that has an impact on their operating cash flow, etc. as well. Where does 538 crore in revenue stand when you look at all the other companies? You have Titan, obviously head and shoulders above everyone else, 4,500 crores. This is their watch business, and an EBIT of 553 crores. HMT, it's a PSU, which is a very slow-moving company and a lot of legacy costs. So they make an EBIT loss of almost 111 crores on meager sales of 163 crores. So take that out. Ethos, again, not an apples-to-apples comparison because Ethos is a watch retailer and not a watch manufacturer or a watch owner. So we have them doing about 1,250 crores in sales versus 130 crores in EBIT. If you look at, Titan as a direct comparable, analysts value Titan anywhere between 25 to 30 times EV to EBITDA, valued between 15,000 to 18,000 crores. Timex watch at the floor price is actually valued at 25 times FY27 expected EBITDA, which implies that it is pretty much at par or maybe at the lower end of where Titan's valuation is, and understandably so. What are the triggers that you'll be looking at from here? One, because it's an OEM business, increased order from brands, their inventory management. I will personally be watching out for how they manage their inventory. Secondly, they are focusing on increased share of revenue coming in from e-commerce. And last year, they acquired Just Watches, which is an offline retailer. So them, supporting offline retail and growing their sales from here on is something I'll be watching out for as well. But Timex is a has-been sort of brand. What are the risks? Disruption in import of key raw material because a lot of their raw materials are imported. Secondly, increased penetration of smartwatches for which they don't have much answers. Thirdly, they have a high reliance on Flipkart for OEM business. So any change out there could impact their overall business. And finally, it's an MNC owned by a foreign parent. Any royalty imposition coming in from the parent could be a bit of a risk as well. So those are a couple of things we'll be watching out for. Timex at floor price, priced in line with what the other watchmakers are, but they do have their fair share of risks and opportunities.
Well, thank you so much, Mangalam, for telling us exactly, what are the key risks, the key perspectives as far as this particular OFS is concerned. Doesn't this also indicate, a growing trend where you're actually seeing MNC promoters go ahead and pairing stake in the Indian companies, and in most cases, the Indian subsidiaries or the Indian entities are trading at much higher valuations? Right?
That's absolutely true, and we've seen that with Whirlpool. We've seen that with a lot of the other companies as well, which are looking, in fact, not only selling their stake in Indian companies, but a lot of times exiting the India business on the whole as well. So let's see where this goes. But from a Timex standpoint, I'll be very interested to see how the business itself does. But speaking about Timex, don't lose sight of Titan. Titan's actually moved to the high point of trade. A large part of that can be attributed to the positive note that has come in from Macquarie this morning. So Titan up around 3%. And on the heels of Titan, we have some gains on the back of that coming in for Kalyan Jewellers as well, because Macquarie's thesis is that the first quarter demand has been fairly good. Timex is lower, pull up Titan and pull up Kalyan Jewellers, both of them doing extremely well. Kalyan Jewellers is up around 4% as we speak at the high point of trade. So jewelry business doing well. But let's get you some interesting